Major Tesla bear, welcome Gordon Johnson, CEO and founder of GLJ Research. And I'll just point out, Gordon, if you weren't an analyst, if you were running a hedge fund, you would have been broke so long ago from Tesla. You would have been trying to cover your shorts so long ago and borrowing money and losing billions of dollars that you wouldn't even be on probably.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, I'm reacting to Tesla's biggest bear, Gordon Johnson, reacting to Tesla's Q4 and full year 2020 earnings. This video comes due to popular demand. Yes, I do really read all the comments. You guys have been begging for this one. I think you guys like Gordon a little bit more than you're willing to let on. Anyway, let's get into the video. But first, hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it.
For more on Tesla, let's bring in a major Tesla bear. Welcome Gordon Johnson, CEO and founder of GLJ Research. And I'll just point out, Gordon, if you weren't an analyst, if you were running a hedge fund, you would have been broke so long ago from Tesla. You would have been trying to cover your shorts so long ago and borrowing money and losing billions of dollars that you wouldn't even be on probably. But you're not. You're an analyst, and you make the case. You've been making the case for 600 or 700 points that Tesla shouldn't be at these levels. Do you feel like it's going your way all of a sudden, given what these other things we're seeing, Gordon?
Can we all just take a moment there to appreciate Joe absolutely eviscerating Gordon Genius Johnson? I mean, the guy's been completely dead fucking wrong about Tesla for years, like more than half a decade. So fair point from Joe there. Although it's quite interesting. I noticed the panel on CNBC have become very, very bullish on Tesla in the last 6 or so months. Isn't that amazing? The stock finally goes to the moon and then, oh, hang on a minute, let's take another look at that Tesla stock. Anyway, let's continue.
I do, and I think that you got to look at what's happening with GameStop. What's happened with GameStop over the past 4 days is essentially what happened with Tesla over the past year. You have essentially, guys coming in and using call options, which allow you to purchase much more stock than you otherwise would, to press the shorts.
One of the oldest tricks in the book there, attempting to tarnish indirectly by bringing something unrelated up, trying to give some kind of association, create a link, just don't actually say it, but kind of imply it without actually saying it. Come on, Gordon.
But with respect to the quarter, the quarter was extremely bad in our view. If you look at what happened, their gross margins fell by about 400 basis points. They're guiding 2021 to about 749,000 cars shipped.
This is incredibly deceptive, dishonest, and manipulative. Let's see what's happened here. Gordon Johnson has added 50% to Tesla's 2020 deliveries figure. Why would he have added 50% to Tesla's delivery figure when Elon Musk on the earnings call said this?
We do think that we can maintain a growth rate in excess of 50% per year for many years to come. And, at least at least 50% a year for many years to come. I think this year we may track to a fair bit above 50%, but we don't want to commit to that, but at least that's what it would appear. And the same again next year. It appears to be meaningfully above 50%.
So is it just me, or does meaningfully above 50% mean meaningfully above, you guessed it, 50%? Just asking.
And they said they're going to have about 1 million cars of capacity, so they're going to be significantly below. You look at what happened with respect to the overall revenue situation, right? You had in the fourth quarter, they shipped 41,000 more cars than they did in the third quarter, but they had a profit that was down $30 million quarter over quarter. So they're shipping more cars and making less money. Why? Because they cut prices 15 times in 2020 to move volumes. Listen, they are not production constrained. That's a major misconception. Their capacity as of last quarter was about 840,000 cars. They sold 499,000.55 cars for the full year. So they're not selling out their capacity.
There is no way the class clown actually believes what he's saying. Again, he's just trying to manipulate the data here. So let's explain a few things. First of all, Tesla's production capacity was increasing throughout the entire year of 2020, meaning that the figure they had at the end of the year for total production capacity is not going to be the amount of vehicles they produce for the year, and the same can be said of this year. However, there's a second part of this as well. Production capacity does not mean how many vehicles the company will produce in a year. Now, let's think of some reasons why that may be. Production capacity assumes the production lines are running 24/7, non-stop, no downtime, no repairs, no maintenance, no upgrades, nothing but pumping out vehicles 24/7. In the real world, production lines do not operate 24/7 without downtime, so this is a moot point. Gordon is trying to attempt to suggest that Tesla could be making more vehicles than it currently is. I just have to ask the obvious question here. If Tesla really could be producing more vehicles from their existing facilities, why the fuck would they be wasting billions of dollars building new factories?
And they're losing significant share in Europe and China, again, despite the price cuts. And again, you're seeing with respect to their margin deterioration and the fact that they're, making less money, it's not panning out for them. So I think a lot of the things that we've highlighted are coming to fruition, and I think it gets a lot worse to them as we look through the rest of this year.
Gordon, I just think the comparison to the GameStop, what we're watching there is kind of strained, though. Would you agree? I mean, GameStop started with a valuation down in single digits in terms of I don't know, what was it even worth $1 billion at the beginning? It was worth maybe over $1 billion, but now it seems extended. Maybe it's not, but it's way up at 35 or 40 billion. But this is an $800 billion company that obviously makes a great product. You see them everywhere, and it has a great story to tell about. You saw President Biden yesterday was climate, and John Kerry's climate. So I just don't know if you can really make that comparison. But you think it's cut from the same cloth. You think what we're seeing in Tesla had already happened, and now we're seeing it move out the risk curve to other companies?
Listen, Joe, it's 100% happening. SoftBank came out and said we brought $1 billion worth of call options to 4 stocks higher, and they specifically mentioned Tesla. Listen, the Fed effectively putting money into the market and effectively lowering the cost to basically for market makers to lend out call options has allowed this to happen. If you allow this to happen over a year, if GameStop keeps going, it could go to $800 billion.
Just between you and I think that might be a little bit of a stretch.
So my point is, yes, this has happened, and it's been stated that it happened. SoftBank said they did this. I think one other thing with respect to Tesla, you say they have a great product.
I don't think anyone is disputing that Tesla has great products. I mean, even half of the hedge fund managers who were short Tesla stock were still driving around in Teslas while they were telling everyone the company was going bankrupt and Elon Musk was a fraud.
They're less than 5% of global automotive cars out there. They're not even 1% of the total automotive cars out there.
Gordon, I don't want to stop you there in the middle of making an enormous mistake, but I just want to point something out to the audience here. The argument that Gordon's attempting to make is, yeah, sure, if their product's so great, then why is their market share so tiny? Tesla's market share today is tiny, and their product is great. That's why everyone is so excited about Tesla stock. Tesla's going to capture more of that market share over time as they continue to scale production and sell more vehicles.
And again, this quarter, they lost money excluding credit sales. They lost money. If you take away the credit sales, they lost money again. So they're not making money selling their cars.
Think of what they do when they start taking more of that market share, Gordon. That might be, look at that half full, not half empty. They got a lot of growth still possible.
I've got to give some credit here to Joe, the host. He eviscerated Gordon Johnson on the in, just totally roasted the guy about being dead fucking wrong about Tesla for like half a decade. And on the way out, he slapped him in the face with some cold, hard logic. Is it just me, or has the entire CNBC panel suddenly become very bullish on Tesla in the last few months? It's almost as if the S&P validated Tesla and they've all taken a second look now, because once the almighty S&P includes Tesla, then it must be a good investment, right? I really mean this, guys. Let me know in the comments below if you've noticed a change in tune. This seems to be very obvious to me. Sometime in the last 6 months, probably less than that, the whole panel, apart from a few who were always a little bit more logical and reasonable, everyone else was hating on Tesla, and now suddenly they're making the same bullish points that we've been talking about for a long time. Have they changed their tune, or am I just going crazy? I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. PS, if you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.